Market update time, February 1st, 2023. Can you believe it is February already? What is going on, guys? Brandon here. We have your market update for the day to see what's going on, give you the frameworks for what to look for, and figure out not just being told what's going on, but what are we looking at? And like I have said for a while now, tradingeconomics.com is a great site to go and get a lot of the data that you need right away. And we explained a little bit about yesterday about like the DXY and stuff like that, what this stuff means, and why the dog wags the tail, and vice versa, right? And knowing what is what. The credit market is the biggest market in the world, so we want to figure out what is going on there, because that is what really derives everything else. Everything else derived from that, from the credit markets at the end of the day. It's what's moving the stock market. It's what's moving the DXY, things like that. Like we talked about yesterday, if the stock market is selling off and rates are rising, that means that and people are selling bonds, meaning the price is coming down and the rates, the yields are rising. That means that people are getting out of, the mortgages around the world, debts around the world are all having to be serviced in higher dollar amounts, right? So if you have a variable rate mortgage, or if you have a loan around the world, everyone's trying to clamor for dollars. Everyone's clamoring for dollars, trying to find dollars to service these higher and higher dollar denominated debts, which, again, don't quote me, but I believe like 80% of the world is denominated in dollars. So what happens is, obviously, the DXY is gaining strength because people are in assets, risk on assets like Bitcoin, a lot of times even gold and silver will, equities, things like that. They're selling off because the dollar is gaining strength. People want to hold those dollars because they need to service those higher and higher interest rate debts with those dollars. So they're trying to sell off all these assets to collect dollars, which increases the purchasing power of the dollar. That's where the DXY goes up, to then come up top again to service these higher and higher interest rate debts. Hopefully that makes sense. We explained it again yesterday a little bit. And then it's in reverse as well. If bonds are being bought up, that means the price is rising, and that means the yield is going down. So like the last 10 years, we've seen a lot of quantitative easing, meaning a lot of bond buying. And really, last 40 years, this huge, and actually we'll try to see it here. Over the last 40 years, we've seen this huge bond bull market, meaning rates are going lower and lower and lower. So last 50 years, so look at this. You've seen the rates for the 10-year just going through the floor because they've been buying bonds. Central banks, especially, we decoupled from actual money, and it's just fiat currency. So they're just printing more and more currency through the buying of bonds and getting it blasted into the market, into the commercial banks and fractional reserve banking and all that. We're not going to go into that today, but that's the general concept of what's happening, right? So at that same time, let's look at the dollar here really quickly over the last 50 years, we'll call it again. And again, you've seen this same pattern of this really over the last, again, since we've decoupled from the dollar, or decoupled from money, the dollar has been losing purchasing power, just like it has for the last 110 years. It lost 99% of its purchasing power over the last 110 years. So sometimes it just goes faster, sometimes it just goes slower. So when you have this effect, where the last 40 years we have bonds being bought up, meaning the price is going up, yields coming down, then you have the DXY going down. You've got debts easier to service all around the world, and then people running into all these other assets because they're like, hey, I need to find yield somewhere because I can't just sit in bonds and get a yield for myself. So I got to go out the risk curve. I got to go buy stocks. I got to go buy Bitcoin. I got to go buy gold and silver. I got to go buy these things that are going to hedge inflation, real estate, whatever is going to hedge inflation. That's why real estate has gone up dramatically, obviously, in the last number of decades, because you have this effect where monetary premium is looking for a return. It's trying to outrun inflation. It's trying to outrun this printing of currency and go somewhere where, and that's what the 1% know, and the 1 to 5% of the people know they need to be in assets, and that's where the 90 to 95% of people don't know. They just sit in savings, they sit in the dollar, and they just get obliterated. Savers are losers, as Robert Kiyosaki says, for many reasons. One, because they just don't think for themselves. They don't study, so they're losers in that aspect. And they're literally losers because they get 1% or 1 cent in interest earned when they're sitting in a bank account. Or, again, even some of these other assets, whether it's any type of paper, whether it's bonds, stocks, 401ks, pensions, Social Security, insurance, sitting in life insurance, whatever it is, you're getting crushed long term. Again, Bitcoin has eaten the lunch of all these asset classes. Even gold and silver has really taken it too, especially the last 20 years. It has really eaten the lunch of all these people, and Bitcoin is just completely outrun all of them over the last 10, 12 years, because people are trying to find a finite, scarce asset. And Bitcoin took that place, was discovered for this reason, because the goalposts were constantly moving and things were constantly moving. So coming full circle, what we do here, obviously we come in and we want to look and see, hey, what is going on? So the 10-year, what has been going on the last couple months? This is why we see this push in the equity markets, because we've seen the last couple of months, we have seen the bonds, we've seen them sell off. See, I can't even, that's why it's confusing. You have to think about it for a second, right? And, or sorry, they've been seeing them sold off for most of the year last year, and then they're being bought up again, right? The central banks are a positive QE around the world right now, so they're being bought up again, injecting liquidity back into the markets. A lot of that sits on banks' balance sheets and stuff like that. And, I know we're going to have the macro guys, yelling and like, well, it's not actually going. Again, this is where you're going to have this, I forget what Mike Maloney calls it, indeflation. Indeflation is where you have asset prices going up and or asset prices going down and consumer prices going up. So we're going to have a little bit of that. We're also going to have just asset price inflation in general over this decade and really the coming decades, because that currency needs to go find a home somewhere, and it's going to get stuffed in these assets again, in these asset classes. That's why the last 10 years you've seen this huge, run up again. Like, let's look at the last 10 years of the stock market. So what's the S&P over the last 10 years? And we've seen a ton of cash flow into here because people are wondering, look at this. I mean, that's literally all the central bank. If you look at the bank's balance sheets, the M2 and the currency, everything they've been doing, all the currency they've been injecting into the economy, look where it's gone. A lot of it's here, right? So you have a lot of it here. Let's look at Bitcoin over the last 10 years. What's happened? Oh yeah, weird. A lot of it's here, right? Just finding a place to go. Real estate charts look very similar, obviously, right? I know homes here in one of the really well-known places. Their median price after the Great Financial Crisis was $80,000 to $100,000. Now they're $200,000 to $300,000. So it just goes to show you they're 3-4 times as much as they were 10 years ago. So again, if we want to see what's actually happening, we know we have to just look at the 10-year Treasury. We just got to look. And again, there's not a lot going on right now. So we know that, quite honestly, I know the VIX, we can start looking at the VIX from now on. The VIX is like 20 and under right now. So it's a pretty calm market. It's a pretty stable market. The traders, the option guys, there's not a ton of volatility going on right this second, because the 10-year is kind of flattened. It keeps kind of grinding lower, and it's kind of flattened a little bit. So there's not much going on. There really isn't. And people are just waiting for the Fed to come out with their decision, whether they're going to raise a little bit, most likely. It's probably baked in the cake. It's not going to change too much. Let's see here. I don't know why this didn't move. Oh, and we just showed the markets, obviously, and what they're doing. Again, just down a little bit. Just today alone, like, again, down 200-300 points in the Dow. 0.5% for some of these indexes, but again, that's the end of the rope there. We looked at the DXY a little bit, and like we said, this is really, look at the dollar strength compared to the other currencies. Have really dropped off because we've seen injection into the central banks, and we've seen the 10-year yield dropping and being bought up by. And we just saw I saw a chart the other day. A ton of the Chinese and Japanese investors and governments have been selling off treasuries. However, there's been a ton of buying from really the Federal Reserve, probably their second balance sheet. Again, at the end of the day, these guys hide they have multiple balance sheets. They don't just tell you exactly what's going on. So we have to understand that too. You have to keep questioning what is going on and why are they doing it. But there's been a ton over in Britain, that area buying up the bonds, huge uptick in bond buying from there. So, these central banks also, they don't work together, but clearly they work together, right? They're all the Davos types that go fly around and coordinate these things now. And that used to not happen decades and decades ago, but now this is what happens. We live in this globally connected, this is why you see them a lot of times doing the same things. And let's see what crude oil is dropped a little bit. So again, if we see crude oil dropping, again, that's nice for the economy. In a way, right? Because prices are going to come down, and costs, and travel costs and things like that. However, again, you're going to have, as Greg Manarino says, you're going to have people disappearing if oil gets too low, as we saw a couple years ago. And gold and silver, again, just kind of chopping around right now, but still gold nearing all-time highs, right? It's getting up towards those all-time highs. Silver, still an incredible asset as well. I think you need to have a little bit of analog. I'll get people here and there like, well, what do you can't just have a digital asset? And guys, it's not digital. It is, but it isn't, right? The beauty of Bitcoin is it's actually physical. It's physical machines expending real physical energy, and we turn it into monetary digital energy, and that way we can pass it across photons and electrons and neutrons, right? It's energy. Everything is energy at the end of the day. Everything is molecular. Everything is energy in life. So it's hard to differentiate physical from digital because it's all energy at the end of the day. And people don't see that just because I can't hold the digital energy in my hand or the Bitcoin in my hand. You can hold a hardware wallet. You actually can, right? You can hold the miners in your hand, but the energy, it's actually mining energy, and everything is physical in life. So this is kind of the paradox of life, and being able to understand two opposing opinions in your head at the same time. So again, the markets are waiting for the FOMC. I believe it's this afternoon they're coming out and talking about. So keep an eye on that. I wouldn't expect too many fireworks. Again, the prediction markets are saying 25 to anywhere from nothing to a 50-point basis hike. Again, I think it's pretty baked in. It's probably going to be around 25 basis points. It's pretty baked in. We've had some good inflation numbers, quote unquote, the government rigged inflation numbers, as much as we believe those. And what we need to keep an eye on is the DXY and the 10-year, right? So 3.5, just under 3.5. So watch this. This is going to be the thing to watch going forward, as always, to see where there are problems in the market and what is happening. And watching things like gold and silver, watching things like oil, watching things like the Bitcoin price that are going to show you, and it's still hovering around 23,000, what is happening in the liquidity, global liquidity in the world. So keep an eye on that. And let's check out some of the other things. I always want to, have us think about what is inflation, true inflation here, right? This is a true inflation. It's really, 15%, not 6%. So remember this, when we're making decisions and we're doing things that affect our life, remember what's actually happening. And remember, again, Bitcoin keeps climbing here. People want to say Bitcoin's going away or it's a bubble, all these things. It's literally physical energy and digital energy at the same time. Who else can say that, right? And then it's climbing the leaderboard. It doesn't have much to go. In a few years, it's going to be at the top of this list. And it's undeniable. And you know what else is undeniable? It's $31.5 trillion in debt. So as we've been saying, you can't, the interest in the debt right now is $500 billion. This is why rates can't stay that high for another 6, 12, 18, 24 months. They can't stay high forever because we can't even service the debt. If they're 5% or 6 or 8%, you're talking $1 trillion plus in just interest in the debt. And now this is $1.5 trillion in a deficit each year. And then we're borrowing more currency from the Fed. And it's just I laughed because you have to laugh, and otherwise you don't know. And I laughed too because I have hope. I actually, we prepare for these things. So we talk about all the time. We talk about our portfolio allocation each month and where we're allocating and becoming independent, resilient, being our own central bank, being our own sovereign entity, being our own nation. Every family is its own nation. And again, we have answers. This is the dollar priced in Bitcoin. And you see what happens if you're holding the dollar, you're getting crushed, and we have some cash, we're holding some cash because we want to be prepared for what's coming to scoop up some deals in the short term, maybe the next 12 months or so, but long term, saving in the hardest asset possible. So remember that. Remember at the end of the day, this is your life on dollars, your whole life. This is just eggs, right? This has been in the news a lot lately, but these are your eggs on dollars, up and up and up, exponentially goes up. This is your life on dollars, homes on dollars, buying stocks on dollars, all goes up, buying cars on dollars. Now we have Bitcoin. We have a hard monetary, decentralized, immutable asset. This is your life on Bitcoin. Everything gets cheaper. You're not only buying more eggs, you're buying farms. So the choice is ours at the end of the day. And just let's see right here at the end, is Bitcoin running? Yes, beautiful. It is running. You know what? We should check out the mempool. Let's see, because this is actually the blockchain. People say, "Oh, what's actually going on?" Here it is. Here is Bitcoin on-chain metrics. Here is the mempool being filled up actually, and what's at work and what's actually happening. I mean, look at this. You can go see your actual transactions being put into the blockchain and inscribed forever. This is the beauty. Do we have this with the Fed? No, we can't even get data. They keep discontinuing data on their website, and antiquated data, and their data that's all behind. But here we have the blockchain. We know the issuance schedule. We know exactly what's going on. We have the entire system at work right here, showing us what's been done, the blocks that have been completed. Those are in there forever. No one can change that. Because the cost would be just absolutely unbelievable just to do one block, and then you have to keep catching up to the chain. And if you want to go back, you can't do it. It's so cost inefficient to do it. So this is why we save in the hardest money ever known to man that crosses time and space. and that no one can take from us. We have to know what we hold. What do you want to give to your children? A currency that gets devalued and is debased and is worth less and less and less over time, or a currency that gets harder and harder and harder over time and purchases you more and more things, has more and more value, purchases you more and more things over time, right here. So the choice is up to us. Hold the dollar. Things get more and more expensive because we need more of those dollars to buy things of value or buy things of goods and services, or do we want something that buys us more? Actually, it increases in value, decreases in supply. It's up to us. I appreciate your time and energy. That is your market update for the day. Be on the lookout for the FOMC. Again, I don't think it's going to change too much right now, but we have to be cognizant of what's going on. And remember, just work, provide value, earn more than you spend. Save the difference in the hardest monetary asset in the world. This is not financial advice, it's freedom advice. Please like and subscribe to the channel. Please let us know what you like and didn't like. We can battle it out in the comments. Share it with someone you think might need to hear this, might need to see this from someone else. And save in the hardest asset known possible that we've ever discovered. Time is finite. Bitcoin's finite. Bitcoin is time, and time is Bitcoin. We'll see you on the next one.